Hey, now it's your boy C Dog back out with another video. All right, so in my last video, I kind of talked about my holdings, what they were, and so this video I kind of want to give a little bit more into detail about why I hold them. So I told you guys I have my main holdings. The two I'm going to focus on in this video, my main holdings, XDTE and then QDTE. So this is the Roundhill website. Just type in roundhillinvestments.com. You can pull this up on your computer or your phone and look it up. Um, it has all the information here. So this is XDTE. It's a zero data expiration cover call strategy, ETFs. Um, it utilizes a synthetic cover call strategy that seeks to provide current income on a weekly basis, which is every Friday, while also providing exposure to the S&P 500, right? So it provides exposure to the S&P 500. It doesn't track it, right? So there's a difference with that. But um, last week was a huge distribution. Okay. This distribution rate, it updates every week based on what they pay out. Last week they paid out based on like a 37% return, which is huge. I mean, normally it's like a 20 or 25%. Oh, I gotta plug in my laptop before she dies. Okay. All right, we good. All right. So let's look at the distributions real quick. Let's see right here. So Friday, which was December 5th. Yeah. Okay. Last week they paid out 31 cents per share. Which is pretty big. I mean, normally look, we're seeing 20 cents, 26, 21, 25, 20, 21. So you get the idea. It's like around like a 20, I'd say like a 20 to 22 cent per share payment. But last week was 31 cents, which is awesome. I'm not complaining. Um, no NAV erosion either, which is a plus. Yeah, so here's the distributions in the last 12 months. So yeah, they're all like, I mean, for the most part they're pretty consistent. Like of course you're gonna get like some that are a little lower, some that are a little higher, like these, like goodness, 64 cents. Oh, wow. But you can see they're all right around like a 20-cent return, which is like we want consistency. We don't want all these crazy numbers thrown out everywhere. You know what I mean? We want something stable and consistent. All right, so that's XDTE. Let's check out the other one, QDTE. That this is the other one I hold. Last week, another huge distribution. They paid out a base on like a 57% return. I mean, gosh. All right, so this one, it's a zero data expiration cover call strategy. Again, it's a synthetic cover call strategy that seeks to provide current income on a weekly basis. They pay out every Friday, while also providing exposure to the return or the price of the Nasdaq 100. Okay. Distributions right here. Oh, 38 cents last week when normally we're seeing 23 cents, 22 cents, 20 cents, 23, 19, 20. So I mean that's a huge difference. Let's look at right here. Yeah, okay. Look at this. So yeah, right around a 20-cent return, and then last week they paid out 38 cents, which is phenomenal. Dang, that's the highest one we've gotten. What was this one? 33 cents. Wow. And 29 cents. Dang. Okay, so other than these two huge ones here, this is the highest one we've gotten. So this is last week was the third highest payment in the last year. That's pretty cool. I wonder what happened. When was this? December 20th and December 27th of last year. I wonder what happened there. But We can maybe try to find it in a second. But anyway, so basically, oh no, I don't want that. I want this. Okay, so this is the Nasdaq, right? Um, I'm looking at this on TradingView.com. Um, it's a very good uh, charting platform. You can see pretty much like anything on here, as long as it's like registered or whatever. Like if it has a broker too, you can pretty much look it up and see the price for any stock, index, commodity, whatever. Um, so basically, like how these funds work and why I like them so much is, I mean, one, they give out consistent weekly cash flow. Minus this last week, they paid out a huge amount. I mean, I'm not complaining, but usually it's pretty rare. I mean, you guys saw from the chart below. Let me go back to it real quick. Right here, like the payments are pretty consistent, and that's what we want, right? That's what we need, right? So I like XDTE and then QDTE because XDTE tracks the S&P 500, QDTE tracks the Nasdaq, right? Over time, both of those indexes go up. Um, they go up like what I think the S&P like an average of 8 or 9% a year, and then the Nasdaq's a little more. I want to say it was like a 11 or 12% a year. I don't remember exactly off the top of my head, but over time they do go up. See, look, this is the Nasdaq right here. Um, stretch this back out to like 2016, 2017. Like we're going up, right? That's the Nasdaq. This is the S&P 500. Let me get rid of those things. Um, so yeah, 2016, 2017. Look at that. I mean, we're just trending. Okay. So basically, like how these funds work is they provide income based on how much volume's in the market, right? So because they're using a cover call strategy, they're getting that income based on um, like the the volume that's in the market. If there's no volume in the market, then the options aren't worth a whole lot. But when there is a lot of volume and people are buying and selling, there's going to be a lot of volume in the markets, which makes the options worth a lot more. So last week, I mean, we saw a huge distribution, which means there was a lot of volume in the market. So I have a few ideas. Let's look at the daily chart. It was with the labor market data that came in on the 4th, which was on Thursday of last week. Um, what did we see? We saw the labor market. Yeah, the labor market data claims to have dropped to a 3-year low. They had the government shutdowns in November. Now everyone's like going back to work. So now they're thinking that mixed data suggests that the labor market is now bouncing back, which leads to positive market opportunities. And then today is the 8th. So on December 10th, which is in 2 days, the Fed is supposed to cut rates again. Hopefully, they're going to do like a 25 basis point cut. And if they can do that and achieve it, we could see the markets rally even up some more. So if that happens, we could see the indexes rally. We could see Bitcoin rally. We could see gold, silver rally. I mean, who knows what's going to happen? Like, nothing is guaranteed, but that's what they're trying to do. And I remember, like, they were trying to do this back in, like, September at the beginning of quarter 4 of this year, but we had the government shutdown. So it delayed all this. So that's why everything's, like, kind of, like, acting a little crazy. I mean, look at this. Look at this structure. Like, we're consolidating. We don't know what we want to do, right? It has no idea what way it wants to move. So we're just going to have to wait to see what happens with the news that comes out soon. On the weekly chart, if we close above, I would say 6,900, we could see a market rally. I don't know how high, but that's the S&P, and then this is a NASDAQ here. Similar thing. I mean, if we see the markets closing above, I would say 26,000, we could see them rally up to, I don't know, 28, 29 maybe. I don't know, but hopefully, you know, we see something good. And then even with Bitcoin too, I think Bitcoin's like right at a major support level. Yeah, right here. So let's use this one. Yeah. So last week we went as low as it was 81. Right now it's at about 90. Um, so if Bitcoin can rally, I think we could maybe see like the 140 range, maybe even 150 or 160. But when is that going to happen? I have no idea. It could be in 2 days, it could be in 2 months, or maybe even 2 years. I mean, hopefully not that long, but who knows? I mean, this is gold here. I mean, gold is just on a freaking heater, guys. Look at that. Gosh, dang. This is insane. So, but yeah, all right. Thanks for watching. If you guys stay to the end. So, peace.